Hello, everybody, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News Show, and this is my weekend show. So, thank you very much for joining me. As you can see in the gold price, Mr. Market gave us an opportunity. When I see drops like this that got people a little scared on Friday, where it dropped down quite significantly, and then it gained back a good amount of its losses, but still closed down $36 or 0.85%. I always like to look at the fundamentals that are moving something. And in the case of gold, that has been the death spiral of debt made worse by the cost of unsustainable cost of servicing the debt, the fact that the fiat currency and debt system is broken, the now stagflation is kicking in. So all of these things have not changed from Thursday to Friday. It was merely a profit-taking situation. And later, when I start talking about some of the stocks, you're going to see that they got beaten up quite significantly, almost right across the board. So what that tells me is that there's not a lot of bullish conviction in the mining stocks, the gold, the silver stocks. And I think that's really bullish because if everybody was insanely bullish, we'd have a problem. So which one is disconnected from the other? I certainly believe that it's the gold and silver and mining stocks that are um, dislocated from the price of the metals. At these prices, a lot of companies in the mining space, the gold miners and the silver miners, are making money hand over fist. They're making incredible free cash flow at this rate. In fact, this is shaping up to be the best quarter ever for the average price of gold. And when gold, the average cost of a gold miner to produce an ounce of gold is somewhere around 1,500, let's say 1,600 an ounce. Well, $4,267 makes for a tremendous amount of free cash flow. And so what I'm going to do today is I'm going to start out by going over and reviewing the companies that I think created good opportunities for investors that like to buy when the stocks are cheaper. And I'm going to start out with my unicorn picks. Then I'm going to do my companies that are at the top of my mind lately. Then I have some majors, some mid tiers, some junior miners, developers, and gold explorers to talk about. So I'm going to run through these pretty quickly, otherwise, the show will be too long. So let's start out with McEwen Mining, or McEwen Inc. It is now. Stock chart still hasn't updated it. It is McEwen Inc. Now, as you can see from the lows of earlier this year, down at around $9 per share, it has moved up quite dramatically, closed on Friday at $29.85. This is the Canadian price, and it's down 2.13% on Friday. So again, just like with gold, I review the fundamentals, and the fundamentals are that they've had three really important news releases out over the last couple of weeks that I don't think is priced into the stock yet. And I think that those are the things that investors should pay the most attention to. One is that they got a agreement together with the International Finance Corp, which is part of the World Bank. The idea there is to make sure that the development of the Los Azules copper project meets the requirements of the International Finance Corporation. And then that would enable them to be able to apply to the World Bank for financing. And part of that agreement is that the International Finance Corp has a right of first refusal to cover or to have a first stab at the debt financing of the Los Azules mine. So that was one important development of late. Another was that they got their RIGI accepted into the RIGI program. This is a program by the Argentinian government to promote large investments into Argentina. And some of those big investments are things like the Los Azules mine. And so these give very favorable tax considerations and other things that take away the reasons that some companies may not want to make these large billion plus investments into Argentina. So they got accepted to that. And then they had a great feasibility study that they put out. The big thing that I look at in that feasibility study is that their all-in sustaining costs will be $2.11 US per pound of copper produced, with copper trading north of $5, and I think it's going up a lot higher than that. That's a few dollars per pound of free cash flow. So that is why I call them a unicorn, is because they have a unicorn copper project. There's not many copper projects out there in the top 10 as far as size and low cost that are owned by junior mining companies. And so this makes it a very special situation. And I think additionally, what makes them an example of why I use them a lot when I'm talking about tremendous value propositions is they also produce about 135,000 ounces of gold in 2025. And in 2026, they're going to be moving that number up because they'll start commercial production on a brand new mine that they're building right as we speak. And so they're a gold producer that's growing its production. Their goal is to get it over 200,000 in the next few years. And then they've got this tremendous uh, copper project in Argentina that, in my opinion, is a unicorn copper project. And so, great value proposition with McEwen Inc. And I advise you to take a look at McEwen Inc. All right, um, uh, another of my unicorn picks is a exploration company called um, um, Goliath Resources. Now they started the year down around $1.20-ish, just slightly above a dollar. Currently, they're trading at $2.82 as of Friday. They were down 7.84%, or 24 cents a share. And they've got a phenomenal project in the Golden Triangle of British Columbia, which is one of the most prolific high grade mining jurisdictions in the world. And their Sherbet discovery very well could be one of the top three discoveries there ever. One of the great high grade gold discoveries, which put the Golden Triangle on the map, was the Eskay Creek discovery. Another great one was one that my audience knows a lot about, which was Pretium. I covered that from the time the company was about $3 until they were taken over at $19. And they also had a very high grade a gold mine in the Golden Triangle. And I believe Sherbet will prove to be in the coming years a future gold mine, and a very high grade one at that. What makes it special and why it classifies as a unicorn gold discovery to me is that it has widespread visible gold in the drill core. Now, in a lot of discoveries, or even mines for that matter, you never see visible gold in the core. And they have it on, over the last 2 years, it's over 90% of the holes have hit visible gold to the naked eye, which makes it quite phenomenal. And then when you consider the area that these occurrences of visible gold, you've got drill holes that are probably over 1,000 meters in one dimension by 1,000 meters in another dimension, and from top to bottom as you go down the mountain, about 800 meters of vertical relief. And inside of that area is where they've found, as they've drilled holes, visible gold to the naked eye. So it's a very unique project, and I think it's going to be a great one. I think it's already a great one, and I think it's just going to get better. And they just recently completed a big drill program. They drilled 60,000 meters, and they've only announced about 11 of those holes. So they got 80 that are pending. So they're going to have a lot of news releases over the next, well, right through to the first quarter of 2026. So keep an eye on Goliath, do your homework, and that's the Goliath story. Okay, now my silver developer that I believe has a silver unicorn project is Vizsla Silver. Now, they started the year at about $1.65. On Friday, they closed at $4.53. This is in US dollars. And they were down 6.98% on Friday, down 34 cents. And, just like the fundamentals didn't change in gold and silver from Thursday to Friday, neither did the fundamentals for this company. They are a sponsor of my shows. And by the way, I'm a shareholder of the previous two companies. They are a sponsor of my shows, so I'm very thankful for that. It enables me to do a lot of interviews and coverage of the company. And my sponsors also help me to be able to provide my reporting to my audience for no charge. And so now that I got that disclosure out of the way, let's talk about their Panuco project in Mexico. It is a spectacular project. It's got over 300,000 ounces of silver in the resource, silver equivalent ounces. It's very high grade. It's got a low cost to all-in sustaining cost in their preliminary economic assessment. When they did that preliminary economic assessment in 2024, it had uh, a sorry, an 85% internal rate of return using gold and silver prices that are about half their current prices, even less, I believe. And that was their base case study. If you were to use today's prices for gold and silver, that IRR would be up in the triple digits. And it's got a capex of only $225 million. Most mines these days start at about $1 billion. So to have a $225 million capex is very doable for a junior. The company already has over almost double the capex to build their mine in cash and equivalents in their treasury. And so they're very well financed. They've got an exceptional project. They're doing more drilling. And before too long, I think you're going to start hearing more about their Animas discovery. It's very early days, but I think it could be another spectacular discovery for them. And it could rival their Copala vein, which the Copala and Napoleon are the ones that drive the finances that is in the preliminary economic assessment. And then beyond that, they've got a cluster of epithermal veins, and these veins are very underexplored. There's probably like 100 of them on their project, and they've only really focused on a handful of those. And so they've got a lot of exploration to do, a lot of developments towards building their mine, which they're looking at for first silver pour in 2027. and they're doing other economic reviews. And so the company has a lot on the go. And I think you're going to see a lot more news out of them in the not too distant future. So stay tuned for that. All right. And oops, what did I do here? Hit the wrong screen, I see. Hold on a second. Let me see if I can fix that here. I'll put my final oh, hold on a second. There it is. Charts, options. Why is it not performing for me? Daily in the money. Okay, hold on a second. There we go. All right. Amex Exploration is another sponsor of my shows. And they also, in my opinion, they have a gold unicorn in the making with their Perron project in Quebec. The key zone on their project is called the Champagne Zone. It's a very high grade zone that has about 850,000 ounces in the measured and indicated category with an average grade of 16.2 grams per ton of gold and another 150-ish thousand ounces in the inferred with an average grade of about 10 grams per ton of gold. And it still remains open at depth. Now, in the context of what's being found out there these days, there is very few million ounces over 10 gram per ton gold deposits being found anywhere in the world. And they have one. And in addition to that, they have other zones in their resource estimate that brings their global resource to about over 2 million ounces of gold. And they have a lot more exploration to do. But really, their focus these days is on creating the path to production. And so one of those efforts is that they're applying to do a bulk sample out of the Champagne zone. Now, there's two things that are very interesting about that. One is that they'll tunnel in at an angle into the Champagne zone, and they're not doing it on a small scale. They're doing it as if it were going to be a mine. So as they move it forward, they would just extend deeper underground for the mining of the entire deposit. And so this is a production sized underground working portal into the deposit, a ramp into the deposit. And another important thing is that they're going to be taking that material. There's a lot of mills. They're in a very productive part of Quebec, and there's a lot of underutilized mills in the area, and those companies would like to get them up to capacity. And so they've got this unique opportunity to use those nearby mills to process their bulk sample. And then they're also doing a economic evaluation of toll milling their Champagne zone after they do the bulk sample. And so the idea is you use that nearby mills for the first few years of production and then use the profits from that to then build your mill on the Perron project owned by Amex Exploration. And so that is what they're working on now is the bulk sample and then they'll and the economic evaluation of the toll milling for the first few years of production. And then they're also going to be doing a lot of drilling. So this is another company that has a special project, very unique. There's not very many high grade projects like this anywhere in the world. And to have it in a mining friendly jurisdiction like Quebec makes it even more impressive. And so you take all those things into consideration, and That's what makes them a unicorn gold developer to me. And So do your homework on Amex. All of these companies, I've interviewed their management. And if you go to my YouTube channel and just do a search for Rocks and Stocks News, or you can also go on my Substack at rocksandstocks.substack.com, and you can find all my interviews that I do with management of most of the companies that I talk about. Okay, so those are my unicorn picks. And what a unicorn pick is to me, it's a company that has a very special project that can lead them, in my opinion, to great success. I get that name unicorn from, tech stocks that have had huge success. They're called unicorns. And so I have my own unicorns in the mining business, and I just presented those to you. So let's move on now to, I call these my top of mind picks because I've been doing a lot of homework on these companies, and I'm really impressed with what they have. As you can see, Sokoman Minerals was a sleepy little company trading at a few cents per share, and then it really started to take off. Closed on Friday at $2, 22 and a half cents. It was flat for the day. So it was actually a relative strength story. What's got me excited about Sokoman is that I've been following their Moosehead project in Newfoundland for several years. And what I have always liked about the Moosehead project is that it has widespread high-grade gold. Now, in these orogenic gold deposits, is what they're called, sometimes they can be very complicated. They're not easy to figure out. And so as they were doing that, they weren't getting a lot of attention for what they were doing. And then all of a sudden, attention arrived because Denis Laviolette, who is a very talented geologist, who's had many successes in his career, he decided that he wanted to be the new CEO of this little company. And ever since then, it's been really ramped up its volume, and the share price had a beautiful golden cross with a very high trajectory of the 50-day moving average. Since he's only been on the job for a couple of weeks, and already he's dramatically increased the size of the Moosehead project. He added a whole bunch of ground, and this is really crucial ground because there's these structures that are like big cracks in the earth are how the fluids that carry the gold make their way up to the surface. So in Newfoundland, there's one really important one called the Valentine Lake Fault. And they basically, by this recent acquisition, now control about 30–40% of the Valentine Lake Fault. Now, why that's such an important fault is on the southern end of it is where Equinox is building their Valentine Lake mine, gold mine, and it's going to be a barn burner. It's got over 5 million ounces of gold in its resources. They're starting production. It's going to produce about 250 to 300,000 ounces per year, and at a very low cost. So it's going to be an exceptional new Canadian gold mine. And often, where you find one of those in this kind of rock, age of rocks, and the right faults or cracks in the earth, you often find more. And so Sokoman now has a very large land package. They're also in the midst of doing a $24 million financing. So not only has the stock moved up on big volume, it's also attracted some very key investments into the company for them to be able to raise $24 million, and that's going to go into drilling. And so they've got this big land package. They got drilling that they're going to be doing between now and Christmas. And then as soon as everybody gets back from the Christmas holidays, they'll be able to get back to drilling in the first quarter of 2026. So I think this company is going to have a lot of news in the next, well, for the foreseeable future. And with the new management, they're very talented at these orogenic gold deposits. They found a lot of gold in those kind of deposits, and I think they're going to do it again. And so, that's why I'm a pretty significant shareholder, and I'm very positive about what Sokoman is doing these days. Okay, I think I've mostly just talked about gold and silver. So let's talk about copper. Sterling Metals is, as you can see, it had a huge run because they announced spectacular drill results from their project in Ontario. And since they started moving up on the drilling program getting underway, and then when they delivered those results, it basically almost tripled in price. And what I find very impressive is that, when you look back here, some people were buying this at 30 cents. So at over $2, there's a lot of profit in there. And so I often look at what the profit taking is like after a big run like that. And it was very mild. It only gave back a small portion of the move from, let's say, 30 cents to $3. And then it firmed up again. And they've got a whole bunch more uh, assays to report. They're funded so they can do a lot more drilling. This is a company that I started following because of their discovery hole. And I believe that this company will be the fastest that I've ever turned a company that I pick from discovery hole into what I call explorers with important discoveries. I want to see a few more holes before I put them in that category, but I think that that's where they're going, and I think that they'll be the fastest one to go from discovery hole into my explorers with an important discovery category. And there's not a lot of great high grade, thick intersection copper projects out there these days. And based on the homework that I've done on the distribution of copper mineralization all over this large land package that they have, that suggests a very large source of what pumped those metals, those fluids with the metals up into that widespread distribution on their project. And so this is the hallmark of a very big and powerful mineralizing system. And when you get 150 meters or so of high grade copper, and it also had high grade gold in it, which is quite interesting. That doesn't happen very often. And that's why sterling metal is on the top of my mind a lot lately. And, do your homework on sterling metals. I'm a shareholder. I bought it on the dip after the run at about an average price of $1.90. But I didn't buy it at $1.90 because I thought it would go up to 2 or 2.10. I think it's got a lot higher to go because I think they're on to an important discovery, and there just aren't enough of those in the copper space these days. So have a look at sterling metals. Okay, another company that I've got on my mind a lot lately, and I'm also a shareholder of, is Kirkland Lake Discoveries. And Kirkland Lake Discoveries is in Ontario near the town of Kirkland Lake. And they've got this very large land package with a huge target on it. The shape of that target is somewhat like a 17-kilometer egg, if you will. And on the edge of the egg is where they're finding the base metal, the copper mineralization. And they've also done geophysics, and there's a beautiful geophysical anomalies around that 17-kilometer egg as well. And so they have pending drill results. They're currently doing over $10 million financing. And so once that financing is put to bed, which I think is going to happen in the next handful of days or so, then I think we're going to start hearing more about their drill results. And yeah, there's a lot pending on this company. And I'm very impressed with I've had a good look at the drill core from their discovery. And it's very impressive looking. And in what I look for in those is these the copper is contained within sulfides. And so you look at the sulfide content in the drill core, and it has a lot of it from what is called disseminated sulfides to massive sulfides to semi-massive sulfides. And so, and some good runs of it. So I've got my fingers crossed that they're going to be able to put out a lot of good news when they start reporting on their assay results. And then they're in a place where you can drill pretty much year round. So I don't think it will be long after that we'll start hearing about their next round of drilling. And so this company is another junior explorer with a really great project. And I think that they're going to have a lot of news out as well in the not too distant future. Okay, so now I want to go into my favorite junior gold miner. And this is a company called Borealis Mining. As you can see, they started trading about a year ago, and they are a sponsor of my reports, and I'm a shareholder of the company. Now, what makes them interesting and unique is that they are one of, I think only one, new gold miner in Nevada. Nevada is one of the great gold mining districts in the world. And, it's hard to find a project that you can start mining on. And they've got a couple steps of how they're going into the mining process with their project. So the Borealis mine was a past producing mine back when gold was a lot cheaper than it is now. And so it had some financial difficulties. It ended up that Borealis Mining was able to buy the project when there was sort of a bear market in a couple of years ago for the gold stocks. And they got it at a very attractive price. And what it came with was an ADR plant. So that's how you get the gold to be able to pour gold on the property. It had a mining permit. It had all the tailings and everything, all permitted, power to the project, roads to the project. Oh, I had a little bit of a problem here. Sorry about that, folks. I hope this isn't, there we go. Um, it uh, it had a ADR plant on it, and all the permits. And so it also had a stockpile of material that was just sitting there waiting to go onto the leach pad. And so they brought in a contract miner, I guess you could call it, to crush that material and put it onto the leach pads. And so then they can start recovering gold. They've had one gold pour from that process, and they got another one coming up soon, and they'll have more of those. And so once they finish off that stockpile, then they've got permitted pits, and there is more material on those permitted pits. So the plan is to start mining fresh material from those pits. And then they've got a whole bunch of exploration potential. So they've got a path towards becoming a much larger junior gold miner. And a lot of that will be exploration, well, first expansion of the known pits, then exploration to find new pits. I think that they will find new pits because they've got a very underexplored project. The main drilling was just done on the known pits in the past, but there's reason to believe geologically that there's a lot more ground that could host new pits. And so they're going to be working on that. They also acquired another junior with a project that needed an ADR plant to process its material. So the idea there is that they would take the material from that other project and bring it onto the Borealis mine for pouring gold as it goes through their ADR plant. And so they got two projects in that acquisition, and there's a lot of exploration potential. Those two are in very good areas of Nevada. And so they've got a sort of their organic ability to grow. They have an ability to grow organically at Borealis mine itself and at these other two projects that they acquired by acquiring another junior. And they're also looking at other projects that need an ADR plant like they have that are in Nevada, owned by juniors. And so they are also could benefit from acquiring projects that are not big enough to move the needle for a major, but they would definitely be big enough to move the needle for a junior gold miner. And so they have a very bright future, a strong management team, very talented people on the board of directors. For example, their chairman is Bob Buchan. He's the guy who founded Kinross and grew it. And now it's one of the world's large gold mining companies. And so he's done it before. And with his guidance, the management team, the board of directors have excellent guidance. Plus, they have a very stellar shareholder base, including Rob McEwen, who owns around 15% of the stock in the company. And Eric Sprott owns around 10% of the stock in the company. So, however you look at it, whether you look at the project, the business plan, the board of directors, the management team, and by the way, the insiders own a big chunk of the company, or the big shareholders, everything is sort of ticked off the boxes. So take a look at Borealis Mining. Okay, now I really got to hurry up because still got lots of companies to talk about. Even the greatest gold miner in the world had a tough day on Friday. And whenever I see gold stocks get sold off across the board, I know it's an emotional thing. And when you've got the best gold miner in the world, which is Agnico Eagle, getting hammered by 6.25%, down $16 a share to $244, you can rest assured that the company didn't change from Thursday to Friday. It was, again, overly emotional trading on the gold stocks on Friday because after a big run, it gave back some of the gains. But, the fundamentals of gold haven't changed, and neither have the fundamentals of Agnico Eagle changed. Agnico Eagle is a very efficient miner. Their average cost of production is about $1,500 an ounce. So at over $4,000 an ounce, they're making tremendous free cash flow. You look at what it looks like their year of free cash flow will come in at. They're currently only trading at about 17 times their free cash flow, Not many companies in any sector can say that these days. And as the price of gold goes up, they've been making records in free cash flow. And so now that you've got in the fourth quarter, it will be the best quarter ever for the price of gold. Um, Stands to reason that if they keep their cost, which won't change from quarter to quarter, maybe slightly, but you're talking $10 or $20 an ounce kind of thing. And yet they're making that much free cash flow. Yeah, I'd say just a phenomenal value proposition. And even though I originally started covering this company in early 2024 when they were trading at about $60 a share Canadian, and now they're trading at $244 a share Canadian, I would make the argument that they are a better value proposition today based on free cash flow than they were when the stock was much cheaper, because back then they were trading at 30, 33 times their free cash flow. And at 244 this year, they'll probably end the year at trading at something like, well, if you use today's price and you use what it looks like they'll have for free cash flow in 2025, they're trading at around 17 times their free cash flow. And so, yeah, nothing really changed. And Agnico Eagle is affording people a new chance to take a look at it. Newmont Mining Company is a turnaround pick that I made back here in April when they were just about to go through a golden cross. Since they went through that golden cross, they've spent almost the entire time trading above the 50-day moving average. Why I picked them when I did was because they had gone through the sales of all of their non-core mines and raised about $4 billion from selling those. And then they also fully integrated the takeover of Newcrest into their company. And so that enabled them to get synergies, plus they could then focus on their tier one mines. And in the last quarterly report, although their gold production was down year over year, their free cash flow was at a record high. And a lot of people in the mining business, they get wrapped up in this bigger is better idea when it comes to production. I'm not in that camp. I believe that bigger free cash flow is what's important. And because the price of gold has gone up and they've been able to optimize their tier one mines, they're making records in free cash flow. And so they've done very well since I made them a pick. And I think they got a great future ahead of them with their focus on optimizing their tier one mines. So that's the Newmont story. Now, Pan American Silver, which is another of my new or another of my major precious metals miners that I picked down here at about, I want to say about $40 a share. It closed on Friday at $53.87. It was down 8.77% or $5 a share. And so, again, this company hasn't changed from Thursday to Friday. We did have some profit taking in gold and silver after a huge run-ups in both of them. The fundamental reasons for those run-ups have not changed. And yet, you got an 8.77% discount sale price on Friday. And why I picked the company was not because I thought it would get a 10 or $15 move in the price of the stock. I picked Pan American Silver because as the silver price goes above $50, which it has done now, I think next it goes into a series of record highs. Now, that doesn't happen just like on a smooth line, folks. You're going to have rallies, you're going to have pullbacks, you're going to have rallies, you're going to have pullbacks. But I think it will be into a series of record highs over the rest of this year, next year, and that's about as far forward as I'll look. But in that kind of a scenario, it will be a big win behind the sales of Pan American Silver. And so I'm fortunate that in my audience, I have investors that like to look at majors, mid tiers, junior miners, developers, and explorers. And so this is one of my three major mining company picks, precious metals miners. And that is, as I said earlier, Agnico Eagle, Newmont, and Pan American Silver. And so I think that as we see the price of silver go to where I think it's going, it will be very bullish for Pan American Silver. And that's why I recently picked them. And I think for investors that want exposure to silver with added torque, but not too much downside risk, Pan American Silver is an ideal one to look at. They have about I think it's about $1.2 billion in cash and about $700 million in debt. So their net cash positive by a significant amount. And as the price of silver and gold go up, it will be very good for their bottom line. So that will enable them to grow their free cash flow, grow their cash position and pay down debt. So that affords them a lot of opportunities. Like not recently, they took over Mag Silver for their Juanicipio mine in Mexico. It's a it's a great mine, and Mag Silver owned 46% of it, and 54% of it was held by Fresnillo PLC. So now Pan American Silver and Fresnillo PLC are partners on the Juanicipio mine, and that's starting to flow to the bottom line of Pan American Silver. So they've got that another win behind their sales. Plus, they're already a great miner on their current mines. So they've got a great portfolio of mines and a great pipeline. They make a lot of money. They're going to be making more money as the price of silver and gold goes up. And so have a look at Pan American Silver. All right, let's go into a few mid tiers. And my favorite mid tier is Alamos Gold. Alamos Gold is a company that I picked in early 2024 when they were trading down here at about $16 a share. They closed Friday at $48.35. They were down 8.17%. Notice a lot of these companies that I've talked about so far were down about 8% on Friday. So again, this is not because the fundamentals have changed. It was emotional trading on Friday. And, that gave investors an opportunity to buy Alamos Gold at a 8.17% discount, or $4.30 cheaper than they were on Thursday. They closed at $48.35 on Friday. This is another really great mine operator. They have their cost of production, all-in sustaining cost, is under the average of gold miners, and they're bringing new production online that will bring that even lower, like a few $100s lower than the average cost of most producers. Now, right now, what they're doing is they're taking their free cash flow from their current mines to build out their new mine, so they're investing in the business with their own free cash flow to create even more free cash flow in the not too distant future. And so another thing that I really like about Alamos is they talk about exploration being in their DNA. And not all miners can say that. They don't all put a lot of effort into their exploration. Alamos Gold is one that definitely does. I think that their budget for 2025 is something like $40 million that goes into exploration, and they're very good at finding ounces. I think the statistic is something like $13 or $14 it costs them to find ounces of gold. And so this company has no problem replacing their old mines with new mines, with increasing their production and bringing down their cost of production. So, they're on the path over the next couple of years to grow into a 1 million ounce per year producer. And when they get up to that 1 million ounces of production, they'll be one of the lowest cost significant large scale gold miners in the world. And so, yeah, they've got a bright future ahead of them. And you want to take a look at Alamos Gold. Now, a smaller mid tier, if you will, is Aris Mining. Why I like Aris Mining is they've got this great project in Colombia, and they've got a pipeline of other projects that will help them to grow organically. I picked them when they got down into this mini cup and handle here, and they were trading at about nine and three quarters, somewhere like that. They closed down 7.92%. I'm sounding like a broken record with the amount that these all across the board were down on Friday. It was down $1.22 to $14.19. Why I like this company is because they are a low-cost producer. They've got an exceptional mine at their Segovia mine. They've got other mines that they're developing. And they've got a really talented leader of the company in Neil Woodyer. He's built junior miners into big mid tiers in the past, and I think he's going to do it again with Aris Mining. And yeah, it's another of these mid tiers that I think have great growth prospects in organically inside of their company, and secondarily through the price of gold going up. And so those are the compelling reasons why I think you want to take a look at a company like an Aris. Equinox Gold is another mid-tier that's growing to be a 1 million ounce gold producer. Back here, I picked them back here because they were going through some growing pains at their new mine called Greenstone in Ontario, and the stock got hammered down. And as it was recovering, they changed the management. They brought in a CEO. His name is Darren Hill. He's a very talented mine builder and operator. He came in, he fixed the problems almost day one, and since then, it's the stock has improved quite dramatically. Back then, it was trading at about $8 and let's say $8 per share. It closed Friday at $16.86. It was down 5.76% or $1.03 per share to $16.86. Now, some people look at this company and they get turned off because it has $1 billion in debt. So you always got to look at, well, why do they have $1 billion in debt? Well, they bought another developer, and that's why they had to take on all that debt. But it was an advanced developer, and that is the company that Darren Hall ran. And so that company had a new mine that was nearing commercial production, which it's now starting to pour gold and is moving it towards commercial production in Newfoundland. And so this company is developing two large scale Canadian gold mines right as we speak. And when those both get into full commercial production, they'll have uh, they'll have two great mines. They'll be producing about 1 million ounces a year. They'll be making a lot of free cash flow, which will enable them to pay down their debt. And that's going to be the focus, is get these two mines, Greenstone and Valentine Lake, into full commercial production and start paying down that debt. So if they were a company with $1 billion in debt and they had no way to pay it back, well, then you got a problem. But if you look at the reasons that they had to take on that debt and what they get for taking on that debt, is the ability to pay that debt off very rapidly, maybe a year to 2 year kind of thing. And then it's all gravy after that. Yeah, that's the Equinox story. Okay, so I've talked about bigger miners. Now I'm going to move into uh, one of my favorite junior miners, which is a company called Helostar. And Helostar Metals is focused in Mexico. They got a really young, talented geologist who has a very good sense of business running the company. As you can see, they bought them in early 2024. They were trading at about 18 cents a share. Today they're trading at $1.92. I think I started covering them when they were about 75 cents per share. And they closed down 8.13% on Friday, or 17 cents per share, to $1.92. And so what this company was able to do was buy current mines and put them into production while gold is having such an amazing run. And so their timing couldn't have been better. And they're going to use the profit from that to develop their cornerstone project, which is called Ana Paula. And this is going to be a much bigger operation. And so they didn't want to keep diluting to build that mine. So by taking on buying some mine operating mines. Now, they're not huge producers, but they're very significant producers for a company the size of Heliostar, which enables them not to have to issue more stock and use the free cash flow from that to build their corner or their foundational or key asset, which is Ana Paula. So this company has a great future, great management team, and the ability to bring their Ana Paula project into production without needing to raise a lot of money and issue a bunch of shares. They can do it from free cash flow. All right, so that is the Heliostar story. Another junior miner that I'm very positive about is Sierra Madre Silver and Gold. Hold on a second here. There we go. Sierra Madre Gold and Silver. I think I mixed that up. I started picking them at about 60 cents a share, currently trading at $1.38. They were down 12.10% on Friday, or 19 cents a share, to $1.38. Again, as I've been saying all along this show, they it wasn't because their business changed from Thursday to Friday. Again, gold and silver got uh, a wave of profit taking after big runs, and there's not as much conviction, bullish conviction, in the mining stocks. So they got sold off more significantly than the move in the price. Like I think gold was down 1% or something like that, and a lot of these miners were down, or these gold stocks and silver stocks were down 5 to 12% or so. But I look at the quality of their assets, the mining that they're doing, how they're going about building up their mining production, and to bring down costs and their financial footing. And it all points towards a company that can grow their production organically and make more money along the way and use that to grow into a much bigger junior gold and silver miner. They got a lot of good ground. They're doing a lot of work on that ground for production and drilling. And so they've got a very good news flow, and I think they'll continue to have very good news flow going forward. So take a look at Sierra Madre. Um, this show has been an hour. And I got some more stocks to talk about, but I don't want to make this show too long. So I'll tell you what I'm going to do is I'm going to um, I'm going to talk about these companies on my Monday show. And so I'll leave it at that for today. But I wanted to do this show because of what happened with the price of gold on Friday and silver for that matter. In the case of gold, it was down 0.85%, down $36 an ounce. And this movement created some fear in the gold stocks. And I wanted to, give you a bunch of stocks. And you can also look at my last week's show because last weekend I had my entire list of picks in there. And I tell you what I will do. In the description of this video, I'll put my entire list of companies that are my broken down by majors, mid tiers, junior miners, developers, and explorers. Okay, so that will do you until my next show. Sorry, so back to silver. Silver got more punished. It was down 5% on Friday or $2.67 per ounce. Now, bear in mind that it had a move in from late August. It was trading at about, let's say, $38 a share, an ounce, and it ran all the way up to almost $54 on the spot price. It actually traded above that or sorry, that's on the futures price. It traded above that on the spot price, and it's still trading above that on the spot price. So it's going through a very bullish backwardation period right now. And the key drivers of gold and silver since late August was that the Federal Reserve played their hand and showed that they were going to cut interest rates. And I think what gold, silver, and the precious metals stocks sniffed out was that that's going to cause problematic stagflation when they cut interest rates because they have to try to protect the imploding jobs market. And if the jobs market is stumbling and falling, that's the same thing's going to happen to the economy. So they're going to throw inflation under the bus to protect the economy and the jobs market. And what they're going to effectively do is also cause inflation to go up. I think it goes up towards 4%. And that's in the official numbers that the government puts out, which I don't believe. I think they significantly understate it, maybe by double it, and you're probably closer to real inflation. And so you start talking about those numbers, and that gives you a pretty significant um, gap between growth, GDP, which is overstated, and inflation, which is understated. And so that, I believe, is ultimately what has been of late, what gold and silver and the precious metal stocks have been sniffing out. And that's not going to change because nobody expects it. But I think at the next meeting, there's a possibility the Fed could cut by 0.5% and maybe have to do more of those over the next series of meetings. And so I ultimately think that it won't be long before they are back towards the free money area and quantitative easing, and that will be very bullish for the price of gold and silver. So it's actually Saturday night, and what I'm going to do is Sunday night, I'll finish off these other companies because I got four developers, I've got some explorers to talk about, and I've got four companies that had news out that I wanted to talk about on this show, but instead I'll split it up and I'll do today's Saturday, tomorrow's Sunday. So tomorrow night I'll do my second second half of the weekend show. Alrighty. So as always, I'm not making buying or selling recommendations. I'm merely an idea generator. I use my 32 years of experience in the mining business, that I've had great mentors in geology, geophysics, geochemistry to help me to filter out the wheat from the chaff, if you will. And so I try to help you to find companies to do your own homework on and to talk to your financial advisors about. And I'm a real big proponent of doing that homework because I believe well-informed investors are the best investors. They don't make their investment decisions based on emotions. They base it on facts and logic and numbers. And those are the most successful investors in mining during my career or in any sector. So be that kind of investor. Be the one that does your homework. All right. Talk to you tomorrow. Have a great night. And that's the Saturday show.